Right now, across Britain, millions of homeowners are sitting on a financial time bomb, and most of them don't even know it. We're talking about a single, avoidable mistake that is quietly costing UK households tens of thousands, in some cases, hundreds of thousands of pounds. It doesn't matter if you own a terraced house in Leeds or a semi-detached in Surrey. If you have a mortgage, you need to hear this. Welcome back to UK Economic Report, the channel that cuts through the noise and gives you the financial intelligence that actually matters. I'm your host, and today we're diving into one of the most critical and most neglected topics in personal finance right now. The mistake. Sitting on your lender's standard variable rate, or SVR, when your fixed rate mortgage deal ends, it sounds almost too simple to be catastrophic. But here's the reality. The Bank of England has moved interest rates aggressively over the past few years, and if you haven't reviewed your mortgage deal recently, you could be handing your lender thousands of pounds every single year that you simply don't have to. Let's break it down. When your fixed rate mortgage term ends, whether that's after 2 years, 5 years, or 10, your lender doesn't just leave you hanging. They automatically move you onto their standard variable rate. And that sounds almost reassuring, doesn't it? You're still covered. You're still paying your mortgage. But here's the brutal truth. The SVR is almost always significantly higher than the best deals available in the market. As of early 2025, the average SVR across major UK lenders sits somewhere between 7% and 8.5%. Meanwhile, competitive 2-year and 5-year fixed deals are available from around 4% to 5%. Let's put that in real money. Say you have an outstanding mortgage balance of $250,000 with 20 years remaining. At an SVR of 7.5%, your monthly repayment could be around $2,000 per month. Remortgage to a competitive fix at 4.5%, and that same balance drops to roughly $180 per month. That's a saving of over $400 every single month, or nearly $5,000 a year. Over a 5-year term, that's $25,000 straight back in your pocket. And on larger mortgages, that number multiplies rapidly into 6 figures. This is not hypothetical. This is maths. So how many people are making this mistake right now? More than you might think. According to data from UK Finance and various financial watchdog bodies, hundreds of thousands of homeowners roll onto their lender's SVR every single year. Many of them simply unaware that they have the right and the ability to switch. Some are intimidated by the remortgaging process. Others assume their current lender will automatically offer them the best rate. Many are simply too busy or too overwhelmed to act. And lenders? They're not rushing to remind you. Why would they? Your inaction is their profit. The Financial Conduct Authority, the FCA, has repeatedly raised concerns about the loyalty penalty in financial products, including mortgages. The consumer who does nothing is the consumer who pays the most. And in a high interest rate environment, that penalty is devastating. So what's the solution? Frankly, it's straightforward, but it requires action, and it requires it early. Step 1, know your mortgage end date. Check your mortgage statement, log into your online account, or call your lender. Find out exactly when your current deal expires. The golden window to start acting is 6 months before that date. Most lenders allow you to lock in a new rate up to 6 months in advance, meaning you secure today's rate without penalty, even if you don't switch until your deal actually ends. Step 2, use a whole-of-market mortgage broker. I cannot stress this enough. A whole-of-market broker has access to deals from across the entire lending market, not just your current bank's limited range. Many brokers charge no direct fee to the borrower. They're compensated by the lender. They will compare hundreds of products and find you a deal your bank's branch manager simply won't offer you. Step 3, don't fixate on the rate alone. Look at the total cost of the mortgage deal, including arrangement fees, valuation fees, and any legal costs. A low headline rate with high fees can sometimes cost more overall than a slightly higher rate with no fees. Your broker will do this calculation for you. Step 4, consider your circumstances carefully. If you're planning to move in the next 2 years, a 5-year fix might not be right for you. Early repayment charges could wipe out your savings. If stability is your priority and you plan to stay put, a 5-year or even 10-year fix could provide enormous peace of mind and long-term savings. Now, let's zoom out. Because understanding this mistake also requires understanding why we're in this moment. The Bank of England aggressively raised the base rate from a historic low of 0.1% in late 2021 to a peak of 5.25% in 2023 in an effort to combat runaway inflation. While rates have since begun to edge downward, we are still in an environment of structurally higher interest costs compared to the ultra-low rates that defined the 2010s. Many homeowners who bought or remortgaged between 2020 and 2022 locked in extraordinary deals, some below 2%. Those deals are now expiring in enormous numbers. The transition from those rates to the current market is, for many families, a genuine financial shock. the Office for Budget Responsibility. And major banks have all flagged mortgage affordability as one of the primary financial pressures facing UK households through 2025 and 2026. This is precisely why remortgaging is not just a personal finance tip. It is an act of financial self-defense in the current climate. If you take one thing away from today's video, let it be this: your mortgage will not manage itself. Lenders are not your financial advisors. It is entirely on you, and on people like me, who care about giving you straight answers, to make sure you're not silently losing thousands of pounds every year on a deal that simply does not serve you. Check your mortgage end date today. Book a call with a whole-of-market broker this week. And share this video with every homeowner you know, because too many people are making this mistake in silence. If this has been helpful, please like, subscribe, and hit that notification bell. Every week, UK Economic Report brings you the financial analysis that matters most for your money and your future. I'll see you in the next one.